use all the charts all the time. Why do we do so? Because it keeps us out of trouble. It keeps us from being surprised. Now, we utilize multiple time frames, and we use the longest term chart to help us set our direction. Of course, that is the weekly chart. The intermediate chart also has to be moving in the same direction. Typically, it turns in the new direction first. It's the smaller chart. It always starts on the smallest chart and then works its way up to the biggest. And when the biggest turns, that shows us the real change in trend. Now, the short-term chart, we give some leeway to that. We'll talk about that in a minute. We also use recrosses on the 2-day and the 4-hour, but our big daddy is, of course, the weekly chart, and the first action starts with the weekly vertical crossover. That is when the price percent oscillator crosses over the red signal line in one direction or another, signifying a new direction and a change of trend. The price percent oscillator defines the true direction of the change. Like I said just a minute ago, the 2-day chart precedes the weekly in that move. Now, the bottom line is, all things being equal, the market tends to move in the direction of the largest chart. We say that over and over and over again, and we see it over and over and over again. We're not looking to trade in change. We're looking to trade in tens of thousands of dollars. If the trades go really well and you're using large practice trades, that's why we use the big charts. That's where the big money is. If you're looking for anomalies, problems in the market, inconsistencies, those types of things, that's chump change. We want to find a new trend and jump on that when it is confirmed with that weekly vertical crossover. Now, once we enter the trade after a weekly vertical crossover occurs or that 2-day recross, we want to begin watching each time frame. In fact, we want to always be watching each time frame. Precedent is always given to the larger charts. We want to watch for weakenings in primarily with the price percent oscillator, but also with our derivative oscillator. And you have to be alert for trend line violations. It'll start off first with your 4-hour chart violating a trend line. Then it'll go to the 2-day. And then finally the weekly. So you want to be cognizant of those, giving more attention to the bigger the chart. Follow the rules and you'll rarely be surprised. Now, yes, there can be systemic breakdowns in the market, exogenous events that can occur, such as the coronavirus. But again, did that fool us? No. We saw it coming and announced it. We saw it on our weekly chart when it occurred. We talked about it. We practiced, traded the heck out of it. There are thousands of trading theories and techniques that exist, my friends. Seek out the one that works for you, not just something you like, but something that works in your schedule and helps you accomplish your goals for practice trading. Search out chartable stocks and ETFs where the methods that you're employing work. Stay with it. Experiment. Refine and keep improving your results. Remember, the market's always evolving and everything changes. Thanks so much for being with us. I love this quote. In order to succeed, you must fail so that you know what not to do the next time. We're here for you every day, charting the markets. Join us. Sign up for free at chartingwealth.com to our daily review. Once a week, we provide you with our weekly review and forecast, plus special trainings like this one on a daily basis. We're here for you, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.